Wow. Let's hit Ford because it is tumbling today after reporting earnings and sales, which came in below estimates. Supply chain issues to blame for a shortfall in sales. Ford CEO Jim Farley discussing the quarterly miss with CNBC earlier.
We lost about 100,000 units of production, and that's very material for us. Came in late in the quarter. Most of it is chips, but some new supply issues. Now, you could say, hey, that's just kind of bad luck for Ford. That's not how we see it. We could manage our supply chain all sorts of different ways. We were very dependent on broker chips, things like that.
Emmanuel Rosner of Deutsche Bank joins us now. He just downgraded the stock to sell, cut his price target from 13 to 11. So the company, and you heard the CEO there, Farley blaming the supply chain. But I read your note, and it sounds like you see bigger, more varied problems here.
Yeah, hi, Sarah. I think that it's more than just supply chain. I think that there's a few things that really bother us with the print and even more so with the outlook. I think there's lack of visibility and planning. I think from the company, they had already had a profit warning in the third quarter, but then swore that it would still be able to deliver the full year guidance. And then obviously 3 months later, very large miss in there. I think their cost structure remains stubbornly high. It's true both in terms of fixed cost as well as in terms of their bill of materials. And there's really no traction that's coming across the numbers. And so as people want to be optimistic or positive on Ford, they're essentially thinking, look, could these guys improve their margins from their current levels? We're not seeing any traction of this. And actually, the outlook they gave for 2023 seems really aggressive to us. And we see quite a bit of downside.
Right. Yeah. You have to also compare it to GM, which reported earlier this week and had a good quarter, didn't it?
Yeah, absolutely. GM had a great quarter. Their guidance, which at the time might have felt a little bit aggressive, now in retrospect seems conservative compared to what Ford is saying, because Ford is essentially saying, look, we didn't perform well in 2022, but we'll get $2.5–3 billion of material cost savings as we move into 23. This seems very aggressive. In the case of GM, they launched a restructuring program by expecting a few $100 million of savings. They're also guiding for earnings down at GM, which seems realistic, whereas Ford expects to have their earnings flat, which in our view is going to be very difficult to achieve.
So why is there a problem with visibility on supply for Ford and not as much for GM or Tesla or some of the others?
Yeah. So I think this is, I think, our point. I think that supply can absolutely be disrupted one quarter or the other. If you rewind back to middle of 2022, there were quarters where GM missed as a result of not being able to secure enough chips. And so these things absolutely can happen. It's just when they happen, on a regular basis, this is when questions are being asked. In our case, we think the Ford issue is less about supply, which maybe created some weakness in the quarter, and much more about their cost structure, which is considerably heavier, than GM, several points of margin. And investors were under the impression that they were working on it, and it doesn't look like this is the case so far. So now the message from management was, don't worry, we're on it for next year, or I guess for this year. I think it's quite difficult to accomplish the sort of very large savings they're targeting while investing at the same time so much money needed for electric vehicles. And that's, I think, with the conundrum of Ford. They need to fix their combustion engine operation. They need to invest in electrification all at the same time, and promising to improve earnings and returns at the same time as well. All of this is extremely difficult.
Emmanuel Rosner, thank you very much for joining us on that downgrade today.